I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, the global chip crunch. ARM unveils its biggest overhaul in chip technology in almost a decade, with new designs targeting markets currently dominated by Intel. I spoke to CEO Simon Segars. Plus, everyone seems to want a piece of crypto. That is, I talked to the CEO of Kraken in an exclusive interview about future plans to go public and demand for Bitcoin. And it was one of 2020's top apps, Tinder, offering those lonely in lockdown a chance at love. I'll talk to the company's top matchmaker, CEO Jim Lanzone, and we'll find out what Tinder's new Passport is all about. All of those guests in a moment, but first, U.S. stocks falling for a second day as traders weighed the consequences of more stimulus from the Biden administration. Bloomberg's Kriti Gupta joins us now with the picture. Kriti, take it away.
Well, Emily, a lot of red on the screen, except for when it comes to big tech. You can see on the chart behind me, you can see the S&P 500 in the red, the NASDAQ 100 in the red, a lot of selling pressure. But of course, big tech actually rising above it. It really tells you on the macro front, a lot of this was a reaction to yields. And it looks like on a full session basis, yields were ended the day about flat. But at one point, they were up by 6 basis points. That's the kind of move that usually spooks the likes of your Apples, your Microsofts, your Teslas. But today, not so much. So you are seeing that divergence between big tech and broader tech. But flip up the boards, and I also want to look at some of those Archegos Capital Fund related stocks. Let's just kick it up with the top, really this idea that the biggest banks abroad, Credit Suisse, Nomura, the ones that were more exposed to that blow up, those were the ones that were taking a little bit of a hit. The ones exposed here in the States that have said that those risks, even if they were losses, are immaterial, the likes of Goldman Sachs or Morgan Stanley, those actually higher on the day. And then, of course, let's look at those stock specifics. You are, of course, seeing Viacom and Baidu, two of the big names that saw that massive blow up. Those were in the green. And then, of course, once again, I mentioned that tech not only trading as a bundle anymore. You can see on the chart above you, or on the screen, I should say, SOX index and the S&P 500 Information Technology Index kind of trading in line. But you are seeing those semiconductors, those chip makers outperform, Emily.
All right, Kriti, thanks so much for the roundup. Meantime, the brains behind your phones, your tablets, PCs, cars, smart anything and almost everything, ARM designs the chips that powers many of the world's devices. The company has announced its first new architecture in a decade, the ARM V9 chip. What will this mean for the chip sector and for you and your beloved devices? Here to talk about it more, ARM CEO Simon Segars. Simon, thanks so much for joining us. Good to have you back on the show. So this is a huge new unveiling for ARM. Talk to us about what this means in terms of security and performance and how this sets ARM apart from rivals.
Great. Hi, Emily. Good to see you. The unveiling of this new architecture really is a big moment for us, and it's really exciting for us as well because it's the fruits of many years of labor. Lots of research has gone on into this. And we do a major update to the architecture about once every 10 years, and that may seem like a really long time, but it's really important that there's consistency in the architecture. That is the underlying model that software developers rely on. It's the underlying definition that controls how software runs, how software interacts with the system. And given that we have hundreds of licensees producing chips and millions of developers, it's really important that there's consistency across those devices so that you get compatibility and you get the reuse out of as much code as possible. So as we look forward to the future, this next decade of computing, there are some things that really stand out to us. One is security. The last year has shown just how incredibly dependent we are on digital devices, digital services, and we think that's only going to increase in the future. And the other is the ability to process all the data that's flowing around in the networks. So the ability to run AI algorithms in the most effective and efficient way possible is really important. And these are two major vectors that we've invested in creating this new variant of our architecture.
Now, you are increasingly taking on Intel, which dominates some of the markets you are now hoping to enter. What new markets does this take ARM into, and when will we see this new technology showing up in our devices?
Well, this architecture is really designed to span across the entire range of devices that might have a microprocessor in them. So wherever computing is going to happen, we believe that there's the needs for greater security because of all of the data that's flowing around and greater ability to process that data. So V9 will span across the smallest sensors through devices that sit in the network, up into the cloud and sit in servers that run in the cloud, and all the way up to supercomputers as well. So this is an architecture that's designed to span that entire spectrum of computing.
Now, I wonder if chip-level security is really the way forward and will really keep us safe. That's what everyone thought would be the point of chip-level security, and then we saw a string of attacks. Is it enough?
Well, I think one thing we've learned is that security is an ever-changing task. It's something that we've always got to be investing in. And for me, I think security will come from features that are in the hardware, the underlying architecture, coupled with software that's written to take advantage of those features. And that's why, as we've been developing V9, we've been engaging with the software community, thinking about how secure systems are built. Because actually security comes from the combination of all the components that goes into a system. It isn't just about one thing, it's the combination of everything, and everything has to get right.
Meantime, we're in the middle of an incredibly devastating chip shortage, and it's interesting, I've been getting conflicting opinions on when this will be over. Recently spoke to the CEOs of both Intel and Qualcomm, who had different views about how much longer it would take. Take a listen to part of those conversations.
We have line of sight that demand and supply are going to align by the end of this calendar year.
COVID caused everybody to step back a bit from capacity and build out in the supply chain of the industry, and it induced a radical increase in demand. So you have supply chains scaling back a bit and demand scaling up radically. Wow.
We started to see now some of the capacity investments coming online towards the end of 2021, and we expect that this crisis is going to be behind us.
And now we're in a position that there's a meaningful shortage, and it's going to be a couple of years until that's fully resolved.
So, Simon, is the chip shortage going to be over before the end of the year? Is it going to take a couple of years, or is it something else?
Well, I would think that we're definitely going to see improvements through this year, as Cristiano was saying there, as more capacity does come online. But building a fab is not something that you throw up overnight. It takes a lot of time. It takes a lot of investment. Over the last number of years, the manufacturing industry really has invested a lot of capex in building up capacity. Obviously, the last year has been very, very difficult to deal with. Nobody knew which direction demand was going to go in, and we saw some real kind of sharp moves in different industries. So it will right itself. There will be investment in more capacity, and ultimately, we will get back to a position where supply and demand are better matched.
Once it does right itself, though, I wonder, could we see the opposite? Will then supply outpace demand with everybody just trying to catch up? Well,
and this is the really tough thing, because you are talking about companies having to invest tens of billions of dollars in capex, in equipment, in building the clean room that manufacture wafers. So it's an equation that you've got to get very, very right, because we've been here before. The industry has had too much supply, chip prices plummet, and it reduces investment in raw R&D. So I think over the years, the industry has got a lot better at analyzing supply and demand, and it's generally got better at investing at the right pace so that we can have a balance of capacity and R&D.
Meantime, curious for your reaction to Intel's big unveiling of its own, doubling down on manufacturing, opening a foundry business. What's your take?
Well, Intel's had a foundry business for quite some time. We can see from this supply and demand mismatch at the moment that there's a need for more manufacturing. There's a need for greater capacity. And investing in leading edge process is a very expensive thing to do. And it's the thing that really keeps the performance of semiconductors advancing. So, I welcome investment in that. And I think it'll be a good thing.
Meantime, consolidation has been the name of the game in the chip industry for a couple of years now, and we're still waiting for an update on NVIDIA's plan to buy ARM for $40 billion. Can you give us an update or tell us any more about what the holdup is?
Well, I wouldn't say there was a holdup. When we announced the deal in September, we said it would take about 18 months. We remain confident about that timeline. We are working through with regulators all over the world to make sure that they understand the nature of what we do, how we sit in the supply chain, and how this deal will ultimately support competition in the end markets. We think this is going to be a great thing. It's going to give us the ability to invest more aggressively in our roadmaps and provide that technology, as we've been both very vocal about doing, to any semiconductor company in the world that wants to build chips based around our technology. So we think this will be a good thing. It just takes a long time to work through these transactions.
Meantime, ARM has an interesting ongoing situation in China where, as I understand it, the CEO of ARM China has been terminated but refuses to leave. How is that situation being resolved?
Yeah, we are going through a leadership change in China, and we've talked about this before. It's taking time to resolve. It's hard, nobody can travel there at the moment, but we are confident that that's going to get resolved. And meanwhile, our business in China is remaining very strong. Many licensees are adopting new technology from us. So the business day to day is continuing well. And we're confident that this situation will get resolved.
All right. Simon Segars, CEO of ARM. Always good to have you back on the show, Simon. Thanks so much for stopping by. All right, coming up, the votes are in. We're taking a look at the push to unionize at an Amazon warehouse in Alabama and what the implications of this historic election could be for other workers across the country. That is next. This is Bloomberg. The process of tallying and counting votes of Amazon workers in Alabama is underway in what could be a defining moment for not just the e-commerce giant, but the National Labor Relations Board. For all to see, the votes will be counted via live stream and accessible to anyone with a Zoom account, giving labor workers and the public a front row seat to one of the most highly anticipated unionization votes in years. Joining me now, Wilma Liebman, former chairwoman of the National Labor Relations Board under President Obama. Wilma, thank you so much for joining us. So the last time Amazon workers did a unionization vote was back in 2014, where you had a small group of maintenance and repair workers who decided not to unionize after all. Will this time be different?
I don't know what the results are going to be, but this time is certainly different in the aspect of how much attention this vote has gotten, the fact that it involves nearly 6,000 employees, the fact that it's in the South, coming after during the midst of this pandemic, in the context of all these interlocking crises, the pandemic, the economic crisis, the racial justice crisis, the democracy crisis. And so this is huge. In a way, earlier efforts to organize Amazon workers and other companies have not been huge.
Now, Amazon has pushed back hard on this. And in a statement that we just got, they say our employees know the truth, wages starting at $15 or more, healthcare from day one, a safe and inclusive workplace. We encouraged all of our employees to vote, and their voices will be heard in the days ahead. Amazon has held some mandatory anti-union meetings, which I'm told is not unusual. What do you make of their response?
Their response, I would say, has been typical of companies that wish to avoid unionization, which is a lot of them. But because it's Amazon and because of the size of this workforce, this is more and more so. So it's typical, but more so. And it's been relentless. And the fact that there's been this month-long voting period by mail ballot means that the campaigning has been going on for a long time. I would say the opposition to unionization is intense and relentless by Amazon, which, given its past history over the last few years, demonstrates that it is just relentless in its effort to avoid unionization.
So as you mentioned, it's a mail-in ballot election, and I wonder if that opens the National Labor Relations Board up to more criticism that the official or final tally might be suspect, because it's not happening in person. Do you think this particular vote is one that could be litigated for a long time?
Well, it's always possible that the vote will be litigated, except I would say that in this case, the decision to have a mail ballot election was a unanimous one by the Trump majority NLRB. It was consistent with most of the elections that have been held during this pandemic. And they've been held by mail ballot because of the obvious health risks. Certainly, Amazon made a big play to try to have this election held in person at the facility. They were quite elaborate and creative in what they were going to construct to try to have it in person. And the NLRB, again, a Trump majority, rejected it. So it's possible for sure that Amazon will try to litigate aspects of this mail ballot election. But I think in this case that it will hold up. The mail ballot election itself will not be subject to really intense scrutiny. And I think the other thing that's happened here is that this agency, not a well-known agency, although it's existed since 1935, is really now in the public eye. And it's in the public eye because it's holding a workplace election. So what's on display is workplace democracy.
So what's to stop Amazon from just firing workers who want to unionize? Or what if the union wins and Amazon just shuts the warehouse down?
Well, in theory, that could happen. Of course, the law makes it unlawful. You cannot discriminate against people who want to unionize or who engage in union activities. You can't retaliate against them. The problem is that the law takes a long time. So the process for challenging that and for litigating those kinds of unfair labor practices can be delayed and take a long time. Meantime, workers may be out of work. And the remedies, this is perhaps the most important thing, the remedies under this law are extremely weak. So all that the NLRB can do if they find that people have been unlawfully discharged is order them reinstated, order them to be paid back pay, and order the employer to post a notice in the workplace saying we won't do that again. So it's lengthy, weak remedies.
Do we need stiffer penalties? Does the National Labor Relations process need reform? What would you like to see?
I'd like to see the law reformed. It really has not been significantly amended since 1947. And needless to say, a lot has changed in our society and our economy and in the workplace since 1947. But all efforts to amend the law since then have ended in legislative gridlock. There's going to be another effort. A labor law reform bill has passed the House of Representatives. It's going to be an uphill battle in the Senate as things now stand. But we are desperately in need of updating this labor law. And certainly one of the key components of needed labor law reform is better remedies, something that would pose incentives to employers to obey the law.
Quickly, if the union loses, will there be another vote in Alabama or elsewhere?
Well, there certainly could be. The union may file objections to the election, and if there are grounds for it, the NLRB might hold another election. If the NLRB doesn't order another election, the union would be free to come back in a year and seek another election. But I think even if there's a loss here, that employees around the country and Amazon and other places will be encouraged to try to seek union representation. Even if it's a loss, this has been a huge deal.
All right, Wilma Liebman, we are going to keep following it every step of the way as those votes are tallied and counted. Former chairwoman of the National Labor Relations Board under President Obama. Okay, coming up, Bitcoin continuing to go mainstream as PayPal accepts Bitcoin as a form of payment, and Visa will use a stable coin backed by the US dollar to settle transactions. Do not miss our exclusive conversation with the CEO of Kraken about what it all means for the exchanges coming up and his plans to take the company public. Plus, of course, how high he thinks Bitcoin will go. And speaking of Bitcoin, it climbed back above 58,000 Monday, thanks in part to that news out of Visa. More next. This is Bloomberg. Now to some other tech stories. We are covering a music video on YouTube called Meet the Flockers is stirring up controversy at parent Google over whether its lyrics are racist and offensive to Asians. YouTube employees asked the company to purge the song from the platform. That request was denied about a week ago. The company saying, "We find this video to be highly offensive and understand it is painful for many to watch." The email obtained by Bloomberg then went on to state the company made the difficult decision to leave the video up to enforce our policy consistently and avoid setting a precedent that may lead us having to remove a lot of other music on YouTube. The debate at YouTube, the latest example of Silicon Valley workers and executives disputing the societal and moral implications of business decisions. In a big valuation boost for ByteDance, the parent company of TikTok, shares are now said to be trading with a valuation of more than $250 billion on the secondary market. That means it's more valuable than Exxon or Coca-Cola. The Beijing company is weighing its options for an IPO. And longtime Facebook executive David Fisher is leaving the company after more than a decade. He made the announcement Tuesday morning, saying he'll officially exit in the fall. Fisher, one of the highest-ranking executives overseeing advertising and marketing efforts for business products. He was also heavily involved in some of the social media company's largest deals, including the $5.7 billion investment in India's Jio. The company says it'll look internally and externally to fill that position. Coming up, Tinder breaking its own record on swipes 130 times in a single year amidst a surge of demand and users looking for love in lockdown. We're going to speak to CEO Jim Lanzone exclusively about what he calls a new decade of dating. And as we head to break, take a look at some of big tech's performances Tuesday. Apple leading the NASDAQ into negative territory, also down more than 1%. Microsoft, Intel, and Cisco. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Bitcoin has increased 2.4% after the close Monday. Let's get right to Bloomberg's Kriti Gupta. Kriti, take it away.
Emily, crypto back in vogue today. Bitcoin higher, Ethereum higher. Even that index that Bloomberg has that houses all those cryptocurrencies higher on the day, up 1.9%, up 7% yesterday. So crypto really on a tear, and it's taking the stocks associated with it on a tear as well. Not just those mining stocks as well. If you flip up the boards and look at some of those, you can also see that it's taking some of the names like PayPal, Overstock as well, just because they accept Bitcoin as a payment, in addition to those 15% rallies that you're seeing in the likes of Marathon Digital Holdings. Really tells you here that it's the Bitcoin rally is spilling over into the stock space as well. Flip up the boards one more time, and I want to show you that this isn't random. This has everything to do with technicals. Bitcoin bouncing off of its 50-day moving average. Let's just see if that pattern holds, Emily.
All right, Kriti, thanks so much for that update. Bitcoin, as Kriti said, regaining some of its losses from earlier in the month, climbing to over $58,000. This as Coinbase is expected to go public via direct listing next week. PayPal also rolling out a checkout with crypto service in the U.S., allowing customers with digital currencies in their PayPal wallets to make purchases, and Visa saying it will use a stablecoin backed by the US dollar to settle transactions. Joining us now to discuss it all, Jesse Powell, CEO of the crypto exchange Kraken, which is expected to go public next year. He has previously said Bitcoin could hit $1 million or more. Jesse, thanks so much for joining us. My colleague Shanali Basak with us as well. Jesse, I want to start with Coinbase. We're all expecting it to get out of the gate next week. What will you be watching when it comes to Coinbase's public offering?
Obviously Coinbase is a direct comp for us, so it's very exciting to have finally a public market example and something to point to when thinking about how to value Kraken. Historically, the crypto space has been all private, so we've kind of just got to speculate about how the public markets would value these businesses, and I think it's going to be an indicator for the entire private market, and I think it's going to send valuations of other crypto companies much higher.
Jesse, what are you thinking about in terms of your own IPO? There are some reports out there saying that this could be a possibility as early as next year. What's the plan for yourself?
Yeah, so we're on track to go public next year, probably second half. There's a lot of time between now and then. Anything could happen in the crypto space, so there's no guarantees at the moment, but we're gearing up to be able to do that. We think being in the public market is really great for our clients, who constantly ask us if there's some way they can participate in the upside or the performance of the business. And unfortunately, the rules with the SEC, as they are today, prohibit us really from allowing most of our clients to participate in the upside of the business. So getting to the public markets is really the best way to do that at this time.
So what is gearing up involved? Does that mean you're going to be raising more money before going public?
It's possible. Yeah, we are in discussions now for a round. It's not necessary. We've got a very strong balance sheet. The company's profitable. Raising more capital at this point, I think, would be more about just doing more acquisitions. So, it's something that's out there. I don't know how much more I can say, about that.
So talk to us a little bit about public acceptance. We're watching Bitcoin climb higher. I think last time you were on the show, you said it was going to infinity, the moon, and beyond, but I asked you for a specific number. Since then, we have seen some losses, though, climbing back. What about this? Where do you see Bitcoin by the end of the year?
Yeah, I know it's kind of tough. I think I said Bitcoin's going to infinity, and that's kind of hard to comprehend because I'm measuring it in terms of dollars, and it might be easier to understand it if we measure it, like in terms of Teslas, right? Like now 1 Bitcoin for 1 Model 3, or, probably by the end of the year, I think it'll be 1 Bitcoin per Lambo, and probably by the end of next year, it'll be 1 Bitcoin per Bugatti. So, I think that to me and to the crypto community, I think those kinds of assets make it easier to measure Bitcoin against, because you never know where the dollar is going to be. There could be, 10 times as many US dollars out there a year from now. So it's really hard to measure Bitcoin against the dollar.
Jesse, we're hearing a lot about the cryptos outside of Bitcoin, right? I mean, there's Ethereum getting a lot of interest, Cardano getting a lot of interest. Where do you see those coins being valued at by the end of the year? And are there other areas in crypto that you see your clients gravitating toward as we see other things kind of catch up to where Bitcoin is?
Yeah, so hard to speculate on all these coins. What I can say about Ethereum is that there's a process now to move your coins onto the new Ethereum blockchain that's coming, the proof of stake chain, which is Ethereum 2. And in the process of doing that, you actually burn your Ethereum 1, and that is basically locked up for an indefinite amount of time. It could be years. So that's constraining the supply of Ethereum. I think you're seeing more and more projects on Ethereum. All of the NFT activity is really driving up the use of Ethereum. So hard to predict, but I think we'll probably see north of $2,000 a coin for Ethereum by the end of this year. The other hot coin really is Polkadot, which is sort of the next Ethereum, many people think, where there are a lot of other coins that are being launched on top of this network. And I think you'll see a lot of things that were on Ethereum be ported over to Polkadot for like lower transaction fees.
You mentioned NFTs. There's a lot of people out there that don't know how long this rally can really last around them. What evidence do you have that the kind of NFT boom is here to stay, if any at all?
So there's obviously like a huge market for collectible NFTs right now, and the collectibles business, has been around since the dawn of humanity, right? People have been collecting things. You can look at Etsy or eBay or people going to garage sales, art collectors. There are all sorts of things out there in the world that people like to collect, and I think NFTs are just one more of those things. There's a lot of really great digital art out there, great artists that are moving to the digital format. So, I think you'll see a lot of the newly rich people in crypto start to collect art, and no one's having anyone over to their houses these days. So the way to show off your collection is online, and it makes sense that's digital and that NFTs are really taking off right now. But NFTs are useful for other things too, right? Like you can have concert tickets, you can have proof of ownership of anything as an NFT, and I think you'll see more of that, those commercial applications, especially in like the high fashion industry, where you might have Louis Vuitton create an NFT for every bag that's sold, to combat the counterfeit industry there, which would transfer from the factory to the store to the customer when they buy it. And whenever there's a secondary sale of that Louis Vuitton bag, that NFT could go with it, as a proof of authenticity and a chain of custody. So, I think there are tremendous commercial applications for this, and I really think NFTs are here to stay, whatever you think about, the collectibles segment.
Jesse, some of this is happening now, but a lot of our discussions are always about the future. And when it comes to mainstream corporate acceptance, yes, we hear some good news coming from PayPal, coming from Visa, and of course there's Elon Musk and Tesla. But we interview CEO after CEO who says we're not investing in Bitcoin, we're not speculating at the moment. How different do you think the world will be in 5 years? And can you really assure some of these corporate customers that crypto is here to stay and they're missing out?
Well, thanks to Elon, everyone who owns a piece of the S&P 500 now owns a piece of Bitcoin. So, he's probably in a single stroke, distributed Bitcoin to more people than anyone else on the planet. What to say to these guys? I think you can just wait and see. You can sit on the sidelines and wait and see. But, the price is going up. Obviously, you have guys like MicroStrategy, Michael Saylor, who are very bullish on it, who just keep buying as much as they can. I think it's important to have a view on it. You obviously don't just want to jump on the bandwagon and do something because everyone else is. But if you really look into the fundamentals of crypto and the adoption that we've seen and the number of highly respected financial advisors and visionaries who have flipped on Bitcoin and recently come around and said that they now see that Bitcoin is the future, at this point, it's just like, there's so many people that are backing it and supporting it and see it. I think you owe it to yourself to really take a look at the fundamentals and try to understand why that is. And if you're not understanding that, I think you must not understand how the existing financial system works and how much benefit there is to the world for a Bitcoin standard, a Bitcoin as a store of value, and cryptocurrency broadly as a way to disintermediate a huge number of unnecessary and untrustworthy middlemen that exist in the financial services company that in the space that yeah.
Jesse, I'm curious about, you said you may go public next year. Something interesting about Coinbase is that the valuation in private markets is getting as close to some of the biggest banks in the world. What do you think you can be worth as a public company?
Well, it looks like Coinbase is probably worth $100 billion pre-IPO. There'll probably be a pop after that. So, I think any of these crypto companies, I think they really are the future of finance. And we've built the whole stack from custody to settlement to matching to clearing to payments. So we've had to build the whole stack because nothing was there 10 years ago when we got started with this. And I think there's a real threat that the crypto companies can actually, and crypto is the future, can actually just completely replace everything that exists in the traditional system. And most of these guys have not done their work over the last 10 years to make sure that they are current with the crypto technology. And so I think there's a very real risk that over the next 10 years for those legacy businesses that they're just simply replaced. We've seen the tremendous traction that Cash App has had. PayPal, fortunately for them, they've been on the ball. I think you're going to see more of that, and people that aren't keeping up with that, I think their days are numbered. So I do think that these valuations are very reasonable right now, and they can go much higher.
All right. Well, we will, of course, be watching the Coinbase direct listing very closely next week. And you, as you gear up in the wings, Kraken CEO Jesse Powell and Sonali Basak, thank you so much for joining us. All right. Coming up, a new dawn for online dating. Matchmaking apps aren't just for prospective partners anymore. I'll have an exclusive conversation with Tinder CEO Jim Lanzone next. This is Bloomberg. The analytics firm App Annie has ranked Tinder the top app of 2020 in terms of consumer spend worldwide. The dating app even broke its own record last year of 3 billion swipes per day, 130 times, and saw unprecedented changes in user behavior as the world went into lockdown. Conversations were longer, profiles were updated more often, begging the question, could online dating be changed for good? Joining us now in an exclusive interview, Tinder CEO Jim Lanzone. Jim, so great to have you on the show in your new role as CEO of Tinder. So Tinder topped TikTok, YouTube, Disney Plus in time spent in 2020. So much about last year was unexpected, unprecedented. What surprised you most about what you saw in user behavior?
All right, great to be here, Emily. Good to see you. Well, look, I mean, the first thing is I think when COVID first hit, and again, I joined the company end of July, beginning of August of last year. But when COVID first hit, a lot of people were wondering what was even going to happen to dating apps. You know, are they going to go out of business? You know, what's happening? Very quickly, online dating, which is already the trend, became the main way for people to be able to connect and meet new people. So by the time March had ended, you already had the first day over 3 billion swipes on Tinder. And by the end of the year, as you said, it happened over 130 times. As you went through the year, it migrated from at first being a way to connect with people online only. Then it became a way to connect and maybe do some activities together. So people were doing things like playing Animal Crossing together online after meeting on Tinder. And then by the end of COVID, it became a way, you know, to start venturing back out again, which is obviously what we're about to see now.
So I know there have been more video calls, more time taken to get to know you, which makes sense. What happens then to dating in 2021? What does this look like in a post-pandemic new normal?
Well, again, back to some of the trends I think that started. And again, I would almost compare this to a category like streaming, where that was already the trend. And, you know, the COVID period of time put that over the top for the way people were consuming video and TV. Same thing here. Online dating was already the trend. But now that stigma is almost completely gone in the way that people are, it's the main way that they meet. So the first thing we saw was conversations were up 20%. The length of those conversations was up 30%. And by the end, you know, all through the year, the total number of matches between people up over 40%. So in this, again, was something where even heading into the COVID year, 40% of all couples were meeting online, and Tinder driving over 25% of those means 10% of all people were meeting on couples were meeting on Tinder. That is not only the trend in the US, but going to be the trend around the globe.
But what post-pandemic growth are you expecting? I mean, will Tinder still be topping the charts when we're not in lockdown?
Yeah, there's some debate about are we heading into the summer of love? And I think we've seen an 8x increase in the mention of vaccines in our profiles. So we definitely, are seeing people headed towards that. Look, people are still having a hard time in Europe and places like Brazil. The pandemic is still raging there. And in the US, we think most people will be vaccinated by the end of May. So that, we think that is certainly something that we'll be building into. I think, again, this trend towards online dating was something already very significant. It's been accelerating. Every online dating company, we're part of Match Group and own several in the category, are seeing that growth. I think the only question is, what is life on the other side of COVID like? But either way, this is now the main way that people, are comfortable connecting, and it makes sense because it's just so efficient when you look at the product, the algorithms, bringing people together versus just taking your chances out there.
So are you saying it will be the summer of love? Will there be a roaring 20s kind of comeback?
We don't know. It is, is something where look, I think the baseline is that online dating has done well during this time. Who knows, like, whether it would have been greater without the pandemic, since again, we were already pretty strong with the trend in this space. But, every bit that the world opens back up, this is going to be the main way that they connect.
You're also relaunching Tinder Passport, which means you can virtually travel anywhere in the world, swipe left and right there. How does that work?
Yeah. So normally Passport that is a product where, let's say, you can drop your PIN in New York City if you're going to be traveling there and start to meet people there in advance of your trip. That is usually behind a paywall. Last April, Tinder launched it for free for the month of April. In that case, as a way to, ease people's loneliness in a time when everybody was quarantined. And we saw a 25% increase in people using it. We had a day where we had 55 billion matches in that one day. First time that had ever happened. And that was just from the initial launch of Passport. This time, we are doing it for a different reason, which is to anticipate. So it'll be free for the month of April, but it'll be starting tomorrow. So you get a bonus day. And that'll be, with an eye towards the world opening back up. And we've seen the spike in online travel, people starting to book that. So we're getting ahead of that one.
Now, Bumble recently went public. I've spoken to Whitney Wolfe Herd a number of times. She talks about the rise in older people using the platforms, looking for longer term love, how it's a platform that's safer for women. It is not just Bumble. There's a lot of competition out there. How does Tinder stand out from the pack and stand out from some of the stereotypes that it's for a younger user who's not necessarily looking for long-term love?
Right. Well, I'd say the stereotype in that case, in terms of Tinder, is true. The majority of our audience is under 30. We're very heavily Gen Z. And there are other products like Hinge within the Match portfolio, or Bumble, which are for, let's say, older users who are looking for expressly for a more committed relationship. I think the one thing that's great about Tinder and why we're so large and we're the number one consumer app by revenue globally, we're number one over 100 countries, is because we're non-judgmental that way. It's for everything. So as I mentioned earlier, it is, we may be driving 10% of all marriages in the United States. At the same time, we're for every kind of relationship. The vast majority are not looking for something that's serious at one time, but we enable all of it. And, I think one of the great things about Match Group is there are different brands for different ages of the population, different times in your dating journey, or where you are at your stage in life and what you're looking for. But Tinder is the biggest and the broadest, because not only are we, we invented a big part of the category, but we, let you do, use Tinder for whatever it is you're looking for in a very fluid, non-judgmental way.
Right. Now, you also ran CBS Interactive for years, founded CBS All Access, CBSN, which became Paramount Plus. Got to ask you about the streaming wars between Netflix and Disney Plus and Paramount Plus and HBO. Do you see consolidation here? Or are we just going to keep paying for more and more streaming services?
I've heard some talk about consolidation. I mean, let's say this. I don't know that there's a lot of new entrants coming to the category. And a lot of them, like, again, CBS All Access, which is now Paramount Plus, is still top 5 in terms of total subscribers. And since it launched, the one thing you're not going to have is that moment in time where Netflix came online from DVDs, or free networks decided to give their content to Hulu for, largely for free, or Disney with a 100-year-old catalog spending $100 billion on more content, or Amazon, deciding to give Amazon Prime Video away as part of their overall Prime bundle. I mean, these are things that are not going to, probably happen again. So you do, I think, have a playing field that's fairly well established now. And, I'm someone who's honestly believed this entire time, and we started the first business plan for All Access at the end of 2011, that people are going to subscribe to more than one of these things. And they don't tend to churn through in a classic way. They tend to hit pause, and they'll come back when there's more content that they want to watch. And so I do think the content wars of putting more and more behind these products is going to keep happening. And there's room for more of these than I really do think people think. I think the need for consolidation is not quite as urgent among the 4 to 8 players that people will be kind of choosing between.
Interesting. All right. Tinder CEO, Jim Lanzone, thanks so much for joining us. Good to have you back here on Bloomberg. All right, coming up, another SpaceX test flight gone wrong. What this could mean for the future of manned flights to Mars next. This is Bloomberg. SpaceX had its fourth test flight of its biggest rocket and once again ended in a disaster, sending smoking debris across the launch site and raising the prospect of more development hurdles for a vehicle designed to put humans on the moon and Mars. The last Starship test, back on March 3rd, touched down at a slight incline and was engulfed in flames a minute later. 2 earlier attempts also ending in fireballs. Luckily, no one has been injured so far. Speaking of space, Cathie Wood's ARK Investment Management launched its first new exchange-traded fund in 2 years. The ARK Space Exploration ETF tracks U.S. and global companies engaged in space exploration and innovation. And Spotify has acquired the parent company of Locker Room, the app that lets sports fans and experts chat in real time. No word on how much Spotify is paying for Betty Labs. The company plans to rename Locker Room and broaden its offerings beyond sports. And that does it for this edition of Bloomberg Technology. Tomorrow, you'll see my conversation with IBM CEO Arvind Krishna about the future of work and more. I'm Emily Chang in San Francisco. This is Bloomberg.